Excited to be here today because interest rates are on everybody's mind in financing, and I have my good friend and colleague here, Samantha Scher,
Nice
from
to see
Orange
you,
and
Lydia.
Point. So thank you so much. Look, there's a lot of questions out there for buyers, and one of the most important questions that buyers keep saying right now is, what are interest rates and where are they going? So bring out your crystal ball, girlfriend.
Wish I had it so I could really see. But what the economists are saying is that rates this year for 2025 are going to stay between 6 and 7%. And here we are mid-March and it's around 6.5 right now. So we'll see it come down a little bit or go up a little bit as there are different numbers that come out, but for now, that's sort of where we are and where we see the whole year to be.
So 6.5 is actually one of the lowest we've seen in several months.
Yeah, it's a really good time if you can buy now because the rates are great. And if you do an adjustable rate mortgage that might be fixed for 7 years and then adjusts after that, we've seen those rates even dip below 6.
Wow. So adjustable, can you talk a little bit more about adjustable and is it different qualifications or what is it?
It can be a little bit harder to qualify for, and those below 6 rates are for people that put maybe 30 or 35% down. So it's if you're putting a significant amount down, it would make sense to go with a 7-year loan, so long as you probably will keep that loan for 7 years, or you might refinance it because the rates are supposed to drop more so at the end of 2026. So it wouldn't be a bad idea to have a low rate till the end of 2026, and then you could refi then.
Okay, so you mentioned a little bit about 30% down for an adjustable. So the standard kind of is 20%.
Right.
So what happens if somebody doesn't have 20%? Can they still buy?
Absolutely. So many people think you have to have 20% down. Your parents, your grandparents will all tell you have to have 20% down, but you don't. If you're a first-time home buyer, you can put 3% down, up to certain loan limits for certain counties, right? Otherwise, FHA, if you're a first-time home buyer or you've owned before, it doesn't matter, you could put as little as 3.5% down. So anything in between 3 and 20% usually can work.
So really, if somebody wants to buy, they can, with 3.5% down, you can find a program for them.
Yeah, up to in LA County about 1.2 million.
Wow.
And in Ventura County just under $1 million.
And do you know, what kind of income do you have to make to qualify for something like that?
Probably around $250 a year combined to do a low down.
Okay.
But you can also use cosigners. So very often a first-time home buyer will have help, either with a down payment sometimes, or sometimes with a cosigner like a family member, parent, grandparent, or both.
So home ownership is really important to a lot of younger people, and that's what we're seeing come in the market. So that's really great news. I've heard a little bit about buy downs. Can you talk to us about buy downs? We know a lot of people out there talk about them.
Yes, I love rate buy downs. There's 2 types. So there's permanent buy downs and there's temporary buy downs. Okay. So the permanent ones, interest rates vary. There isn't one rate for one person every day. There's like a whole long list of interest rates for each loan scenario. So a permanent buy down, let's say the interest rate today is 6.5 for this particular client with no extra closing costs, right? Just the standard par rate. So if you wanted to buy it down permanently, the buyer or the seller could help buy that interest rate lower. So let's say their loan amount, they're putting 20% down on $1 million house, loan amount's $800,000. Maybe the buyer says, you know what, I'll pay 1 point or 1% of $800,000, so $8,000, and I'm gonna lower my rate to 6.1 forever. Great, right? That'll save them a few $100s every month. That's fine. Or maybe the seller, or maybe you, Lydia, were able to negotiate a seller credit to help pay for that. And that would keep their rate the same for 30 years at 6.125. But a temporary buy down, the second option, I really like because it helps get the buyer a lower rate temporarily. It has to be paid for by the seller. There's 3-year, 2-year, and 1-year temporary buy downs. The less in years, the cheaper it is for the seller. Okay, but what it would mean is the interest rate on a 2-year buy down would mean that instead of 6.5, they would get 2% lower. So 4.5% year 1. Okay, and then it graduates, so then it would be 5.5% year 2, and then years 3 through 30 would be 6.5. But like we said, at the end of 2026, hopefully rates will really go down. They'll refi, and then hopefully they can capture a low rate for the rest of their time in that home.
So that's really the magic. If we can get a seller buy down and we can negotiate it, and we as agents know how to do that,
Yes.
and get our sellers to pay for that, a buyer can actually lower their percentage points, 2 points for 1 year, 1 point for the second year,
Right.
and then save so much money, which is amazing.
Yeah.
So really, really important. What kind of I love that. So any questions, more questions, reach out to Sam. Really super great programs for buyers out there. What about self-employed? What are you seeing out there for self-employment loans?
Well, right now, right, everybody's thinking about filing their taxes.
Yeah.
And we're talking to our CPAs. And when you're self-employed, you have the option to write off a lot of your expenses and not pay so much in taxes, right? Which is the ideal reason why most people are self-employed. But when you're self-employed and you have written down all of those expenses, you show very little income on your tax returns. And you march into your regular bank and they say, well, you don't qualify because your tax returns don't show enough income. So for self-employed people, we can help them by just looking at their gross deposits on their bank statements instead of their tax returns. So go ahead and file as you normally would, no problem. Or I'm more than happy to look at your draft return. But this way, with their bank statements, they can qualify for much more than they thought they could have with
Are
their
interest
bank.
rates higher for that?
A smidge, not much, maybe 0.1, 0.2 higher, not much of a difference, but the strategy is you're not spending so much on taxes and maybe not spending all your down payment on your taxes, right? So you can keep it that way and yes, have a little higher mortgage rate, but I think it's worth it.
I love it. So it sounds to me there's lots of programs out there for buyers. Sounds like even though everybody's thinking the rates are high, there's ways to bring the rates down. And if buyer really wants to get into home ownership,
Right.
there's lots of great options. for that.
Absolutely, yes.
Okay, so let's talk about sellers. What do you think the high interest rates are doing to the market and what's happening to prices, and how should sellers be looking at this?
Right now, I mean, these higher interest rates are making buyers take a beat, right? Take a minute. And yes, right now, interest rates are better than they were, right? And buyers are more accustomed to these little bit higher rates between 6 and 7. Now, not expecting them to come to 3% again, right? So they are ready to make offers, but again, sometimes those payments are just so high for them, especially if home prices have been pushed up. And they may even get pushed up more now with the tariffs and things we were talking about, right? So buyers are just feeling really stretched. And so going into a house that might be well priced, they're still looking at that payment and they still may say, you know what, it's not for me. Who knows, right? So they may want to ask for these credits for buy downs and things like that.
So how else can a seller potentially help? So you mentioned the buy down. Is there anything else that a seller could be thinking about? Are there assumable loans out there? Is there anything else that's creative that a seller can do?
Yeah. Well, I think a seller, if they have a VA loan or an FHA loan, those loans can be assumed. Okay. And sometimes with those, though, whatever they owe, right, the buyer would still have to come up with that difference on the new home. So if they owe $300,000 on their mortgage from their old VA loan, and now they're selling their house for $1 million, the buyer has to come up with that difference. So assumable loans are not always the best for a buyer, right? If you don't owe a lot, the seller doesn't owe a lot. But a seller could offer to maybe pay closing costs for a buyer. That's 3% of the purchase price. That would really save on the borrower's total out of pocket.
So again, creativity, trying to get creative because affordability is a factor for a buyer.
Yes.
Okay, as we're going in, just one last question, and it's so helpful. We are seeing some multiple offers out there. So can you help a seller evaluate how to evaluate the loan options that are being brought to them?
Yeah. I think a seller always wants to get the highest price, right? That's really ultimately what they want. And so if they look at the two highest priced offers, but then really talk to the lender, because even though a buyer might be putting, say, 40% down, that might be all that they qualify for. And like if something changes, they may not actually get that loan. So it may look like a great offer, but when you really talk to the lender, you want to find out things like, what does this buyer do for work? What is their debt ratio? And that's something that a seller's agent can ask a lender and get this information to really get a much better picture of that buyer.
So exactly what you said. Whenever we get multiple offers, thank you so much for always cross-qualifying
Yes.
our buyers.
Yes.
And we make sure our sellers are comfortable with the offers they accept so that they're qualified, and then the buyers get to choose whatever the lender they want.
Absolutely.
But you are an amazing resource to
Thank
us
you.
and to the community, and super helpful. And is there anything last minute you want to say?
I just thank you for helping me, my business, and supporting me. And I love working with you and your team. And everybody's just out there to help. So I'm glad to be partnered with you.
Lovely. Well, we'd love to partner with you. If you have any questions, you can reach out to either one of us. Our contact information is below. And if you like this and you want more, please make sure and subscribe. See you next time.